Hi there, traders. This is Brad Gilbert with today's trading action. All right, now I mentioned a few days ago, some of you may remember, it would come out what was going on around that big sell-off, right? And you look at the one of the updates here, traders lose billions on big volatility short after stocks rout, right? This is where a lot of the and this happens, every 5 or so years. Hedge funds and pensions funds, they pile billions into the market, especially when there's not a lot happening on the expectation that nothing is going to happen. And then all of a sudden, the crap hits the fan, or the proverbial, and then you see a massive clean out, and you see a lot of these fund managers get absolutely wiped out. So there's a bit of that going on. The yen, well, tumbles as BOJ downplays chance of hikes. That was always the way, right? I know the BOJ was sort of hinting at maybe they go again, but the markets got ahead of themselves. And that's generally what happens, especially when there's firms absolutely getting hammered. Now, let me just come back and just give you a quick refresh of what's going on. And actually, let me just come to the daily charts first, because this tells a story. And this is why traders are sitting on the fence. A lot of the technical aspects of the market have been blown out of the water, right? There's been some chaotic moves there on Monday on those big moves. So the market is now with those losses across fund managers and traders galore, right? The good thing about missing that is we start fresh. But you know what? They're licking their wounds. So when there's a big move like this, and this has always been the case, the market sits back, recalibrates, and they sort of like, it's almost like a reflection, like what the hell happened there? Okay. And if you didn't get caught up in it, well, you're okay. But we are starting to see normality come into the markets. If I come back to the hourly charts, the one interesting one was euro, right? You can sort of see, I've just redone my charts. You can see euro sort of just trading sideways here. And there's a big green, strong trend line there. I was just having a look back through euro, right? And that's a trend line. This is why it's sort of come back and gravitated towards that longer term resistance trend line. This is holding euro at peace at the moment, right? And that's why euro isn't really going anywhere. It had enough momentum to blast through, but now, you know what? Market is recalibrating the fair value of euro, and it's sort of found a bit of a home here at 109.25, but not going anywhere. No one wants to short it. No one wants to get long, and that's where we are. Sterling, well, sort of still sitting down on its haunches. And then the Aussie and Kiwi have both topped out. This is where they were sort of Monday, right? We're back here. They sort of topped out, a bit of China, bit of negativity around the commodity currencies, Aussie, Kiwi, and CAD. And then all of a sudden they sort of blasted. So I was just saying yesterday, oil was at $73 and dollar CAD was sort of around 137.70. Something either had to give. Oil either had to rally or dollar CAD was going to go back up. It's like a little bit of both. But without any major fundamental news around, we are starting to sort of, the market's like nothing to do, right? But what we are starting to see is the development and the growth of these new short-term trend lines, right? This one here on dollar yen, we've got a nice one developing here, short-term support trend line there on dollar Swiss. We've got the long-term sort of trend line here holding euro, and we've got these new resistance trend lines for Aussie and Kiwi. So the market is basically taking shape again. And whilst it does that, traders at the banks will sit tight and just watch what's happening. Now, so let's just have a look where the sort of major momentum or direction may come through today. So just having a look here, I mean, the Chinese numbers are out a little bit early there, primarily because there's no sort of set time on these things, which is hugely annoying for everyone. You think they'd sort of join the global community and put some times on these things. So just having a look at, you can sort of go through the past data, sort of connect what's going on. But really, as I've been saying, there's a bit of disjointed action here on a lot of the fundamentals, and there's not a huge amount coming out at the moment, right? So there's, initial jobless claims, a few other things like that, but really there's not much else to be sort of looking for, right? And take this opportunity to take a breath, right? See what's going on. Now, one of the interesting things, right? I keep saying to you, take this interest rate probability chart with a grain of salt, right? what they are factoring in, the one thing, and I check this every day, is that they are now factoring in cuts for the Aussie and Kiwi, August for New Zealand and September for Australia. Now, this is against what the RBA have said, right? So you work out, okay, this is what the central bank's telling me, and this is what the derivatives market is pricing in. And primarily, I think it's more around the whole global growth thing, right? ECB, Fed cutting. The Bank of England is sort of a line baller, okay? Bank of Japan, well, they're the odd one out. And then you've got the Swiss National Bank, Bank of Canada, and then they're sort of saying, well, these other banks are going to go, okay? RBA, I mean, the BRICS banks, even below that, are cutting as well. So that's an interesting one. We just want to keep an eye on this as it plays out. That could well be why the Aussie and Kiwi aren't really going up, right? Now, global markets. So not much to look at, but just if you are trading, make sure you're connecting with the global markets. Now, equity markets have been up, down, turned around. I mean, it's just been one of those weeks where the market's it's just carnage, right? This isn't good for trading, and this is where liquidity comes out of the market. People stand back and go, you know what? This is a little bit too hard, okay? The market's there a little bit, I mean, equity market's down. US interest rates slightly up on the day, I would say, especially the long dated stuff is back up at 4.25, the 20 years at 4.34. So that makes sense, right? Slightly higher US yields. Then you've got weaker equity markets. But once again, we're not seeing clarity across the currencies yet, right? So take the time. There's not a huge amount of data coming out. Don't go looking for trouble, right? Because there's things that don't make a lot of sense at the moment, but they will very quickly, right? Once the market settles down like it has, we've got some new trend lines in play, especially on the hourlies, right? This is where we're going to see some price action, I believe. To me, the dollar is going down. That's the driver, okay? The US dollar should be lower, and we aren't sort of seeing it across the board yet, but that's what I'm expecting as we go through the end of this week and into early next week. All right. Sorry, I can't be more sort of pinpoint the exact trade, but I will send out a trade alert if I see something specific, right? To me, like still dollar yen, right, is the main trade here, right? Fundamentally on a number of different levels, like weaker dollar, okay, higher Japanese rates, bit of a rush to the safe haven. It's back on, right? This is the exact same thing that we had when the US non-farm payrolls came out here, right? That's the non-farm payrolls move. And then we saw the calamity afterwards. But you know what? The market's stabilized. We've flushed out all those stale positions. We have a nice level here, and we've got the cloud below. Dollar yen or the yen crosses is still where the action is. That carry trade is not going to be doing so well, especially when you consider most of the central banks are going to be cutting rates here, right? Sometimes it's like so simple. It's like you think, why isn't everyone on this? Well, it's because they've been flushed out and they're concerned about the initial volatility. Once things settle down, that's where the focus will be on the exit of the carry trade. So hang in there and we'll see how it plays out from here. But no major US numbers, so I can't see too much happening just at the moment. Good luck and happy trading.